Welcome everybody. This is the Thursday evening Viper Trading webinar. You are here to learn about trading the futures markets using the Viper tools. You are absolutely in the right place. First, we got to knock out our standard disclaimer before we can get over to some charts and look at trades that set up in these futures markets today. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. Most excellent. All right, so we took a poll of the tonight's topic is trail stops. Of course, we're going to focus on much more than just trail stops. We'll work trail stops into the discussion. But first of all, we're going to hit the basics real quick here. If you are new or visiting, what you are looking at is a chart of the Russell RTY. This is the futures for the E-mini Russell 2000 market, $5 a tick. All of the equities are on the September contract. Russell, YM, Mini Dow, $5 a tick. NASDAQ, we refer to it as SPASI. Now, gold is on the August contract, and it is $10 a tick. ES is $12.50 on September, and crude's on August as well, and that's $10 per tick. And so that means that every tick of movement is worth either $5 or $10. Now, what you see here is a chart with the data feed for the Russell. We have the predictors, which are real-time swings that paint, turn those on and off. We have the power meters here, which are more or less sort of trend indicators. And the way our system works is as follows. We've got background colors, bar colors. We've got the mid band here with all the 4 bands above it and 4 bands below it. And the most important thing to determine when you start to trade, and I'm going to orient everybody like this, midnight Pacific coming into the 5th today was right here. So you would adjust this chart to your local time frame. And what you can see clearly on this one chart here is that markets go through different periods of how they are, the movement that they exhibit. So here's an example here in the Asian session, which is over here. That is from 5 o'clock my time. So the Asian session is just kind of kicking off right now. So yesterday, last night, going into midnight, RTY was pretty much range bound with support down here and resistance up there. Everybody sees that, right? Then in the European session, you can see that we went into an uptrend like such. So overnight, you were trending up for the most part. And then the market for the U.S. equity markets opened at 6:30 Pacific, so that would have been right here. Now, we always say that in the first hour or two of trading, you have to be prepared to let the markets go any direction they choose. In other words, let's go back and reconstruct what happened at the open. We like to take mid-band trades. And let me talk about what happened here. There was a trade that came up in the pre-market session. Excuse me, before 6:30, you have what is called a deep bar probe, where the market goes almost to the outermost band. So the market comes all the way back out here. You have a bounce, and you get one last gasp to the top. Now, we had an inkling that this market might be changing direction. For what reason? When we see this might be a clue that what might happen. What is this? What is this clue? First of all, what happened here with this thrust move right here? Let me help you out. This is the first question of the evening. I want to make sure everybody's awake. Drink your shot of espresso so you're good to go for the next hour. Yeah, it didn't take the high out. So what we're saying, just to be clear here, is that if this uptrend was going to continue, then what should have happened? This should have happened. At least you should have at least gotten back to 77.80 and for trend continuation taking it out. But that did not happen here. So this was sort of this is a little breadcrumb clue that something changing might be afoot. Now we did get head faked into a trade here. Said put this box on here and let it go either way. Now, if you did that, you were filled long on the close of this bar. There was a head fake here that stopped out for a loss. Right here. Now, when this fills, you by default you have a 12 tick initial stop. So let's do the math here so we can talk about how to deal with situations like this in case it happens to you tomorrow morning. Let's say hypothetically you were filled on 75.90. 12 ticks below there would be put you at 74.70, which is actually right at the bottom of the box, right here. Now, this sat here for a while. I mean, this took a while for this to unfold. It went into the box around 6:31, and it didn't give you a head fake till 6:32, 6:33. So it was actually sitting here for about a minute and a half to 2 minutes. That doesn't sound like long, but at the open, that's plenty of time. Now, if you get a head fake like this, do you have to wait until the market comes all the way down here and takes your stop out? You just have to sit there and let it just flip around and come all the way down here. Do you need to do that? What else could you do? Say tomorrow morning when you're faced with this situation right here. What do you do? What do you do? Clearly, there's no follow through. Within 2 bars, you can tell right away. You can tell right away if a market's going to continue up because you should have at least gotten to here. But you can tell right here the market was exhibiting weakness. Hit the close button. Who said that? Greg, Roger. Move stop up. Mario, good. Yeah, you don't have to take the full hit. So your 2 options in situations like this are if you're concerned and these bars are dinking around your entry here and you don't want to take a full hit, you have 2 options. The quickest, easiest solution, and the one that I use quite often, is I just hit the close button, and wherever it is in here, I'm out. It just cancels everything. That trade didn't work out. Dump it. Yeah, Brian, exactly. Get out. Get out. Don't worry about the fact you took a little pop for a few ticks right out of the gate. It's not a big deal. It's early. There's going to be plenty of time to make up for that trade, right? The key is you got to lick your wounds and get back in the game. Now, if you reactivated this box, you were actually filled short right here. Now, there was a secondary entry. There was a secondary entry. If you closed this thing and it flushed everything out, close your order, close the stop out, close the box, everything's all shut down, and the thing breaks, you had a pause here where you could have done one of 2 things to catch the short. You could have reboxed it right here, which is perfectly acceptable. You're just under the midband. Or put a sell limit order under the swing right here. Now, if you used OT, you would have been filled short on the close of this bar right here. And the limit order would be filled here, but you have to put your targets and stops in yourself. OT does it automatically. Well, Brian, here's Brian's question, and it's a good one. He says, why shouldn't we then have tighter stops at 6 ticks? Well, because, there is an occasion where a market will go up and get you in and then pull back. And if you're too tight, if you're like 4 or 6 ticks, you can't even take 1 or 2 bars here and you're going to be bipped right out of it. There is an occasion where I've seen bars close up, close up, close up. You're in the money. Maybe it doesn't quite get to your scalp target, but then it pulls back in. And if you have it too tight a stop, it's just going to bip you right out of something that could be a good trade. You could set it, if you want to test. It really depends on the instrument. NASDAQ, if you're trading a high flyer, a big mover like NASI, you're going to want to have the bigger stops. Okay? With YM, you might be able to get away with it. I would just experiment with it in Sim using Object Trader, different settings on your stops. If you keep getting stopped out and you miss the run, then you got to move it out. Okay, you see what I mean? Yeah. Yeah, you don't want to get in a situation where, you get in and then it pulls back a couple of 3, 4, 5 ticks, bip, takes you out, and then runs 50 and you miss it. So, uh, it's best to keep your settings the way they are and then adjust accordingly on the circumstances. But there was a secondary shot, so you're filled either short on the close of this bar or short or close of this bar. Now let's talk about trail stops once you're in. There are several schools of thought. Okay, and I'll just outline them as follows. The three spots that I watch for trail stops when I'm in a trade are on a short side are this. Excuse me. Can you see line 2? The skinny line right here. I'm always watching that line right there, and I'm watching it in connection with the stealth line, and the stealth line is right here. Actually, let me draw that in a little different, better way. Hold on. Now it's all jacked up. Oh, jeez. Okay, let me draw the stealth line in a little bit different way. Okay, I'm going to draw it like this. I'm going to draw it like this. And then I'm going to draw the third level. So I think a good way to think of trail stops is they are part art and part science. And they require for you to develop a little bit of a feel for your instrument. So what do I mean by that? Is that just some kind of chicken way of not being able to address it? No, not really. Because here's what I'm saying. If you follow explicitly line 2 on the shorts, then there are many times when it will wick it and then roll and go on to give you more trade. So it's got to be looser than line 2. Okay? Line 2 is usually pretty too tight. Sometimes if there's a distance between line 2 and stealth, you can fade the stealth line and go slightly above it like this. So in other words, you're not right on it. You're slightly above it, and you're sitting here somewhere between stealth, line 2, and the mid-band. Okay? And so when you're in the room, if you hear things like, okay, your tight stops are here. Tight stops generally in the room are going to be called on the shorts somewhere located, if you follow it, right around line 2 and stealth. Meaning that if you go super tight like that, it's going to take you out, and you're going to have to either get back in or miss the tail end of the trade. When you hear looser stops, what that is referring to is an imaginary line between stealth and line 2 and the midband. So that would be somewhere here like 7250. You can use line 3 because line 3 is generally located right where I'm showing you between stealth and line 2 and the midband, which can be as much as 20 ticks away. So what we're saying here is the trade-off and the balance of trail stops is are you willing to give up? Are you going to allow a market to retrace a certain amount, which takes away from the profitability of your trade? As much as 70 all the way to 7250 is like, what is that? Like 15 ticks? So you're giving up 15 ticks on your trade. On the other hand, there are many times where you sacrifice that 15 ticks, but then the market drops another 25 ticks, and you get a chance to make more money on the trade. So it's however flexible you want to be. Now, that being said, when do you tighten the stops? So let's suppose that you're filled up here at this 74.40, and you're all the way down here at 69.40, which is the whole drop from here to here is roughly 50 ticks. Now, this is where studying your instrument comes into play. You have to have a good feel for when you have a certain amount of movements, how much does it tend to pull back? In the case of this 50 tick movement here, from here to here, it's not unusual to expect, say, 30, 35%, 50% pullback, which would be 25 ticks, taking you all the way right back up to the midband here. Excuse me. So what am I saying by that? Well, it depends on where the trail stop sits in relation to the overall move. If you're in the beginning stages of the move, like here and here when you're starting to drop, you want to be a little looser. You want to be a little looser to allow the market to kind of move around a little bit, right? And do a little bit of retrace, a little bit of retrace, a little bit of retrace, a little bit of retrace. Now, if you start after, just to be clear, explicitly clear, what I'm saying here is that if the market's dropped 50 ticks, no more loose. Don't leave your stop way up here after a 50 tick drop. Crank that puppy way down and get out down here. So that's what you hear in the room, no more loose, is because the market has moved in a considerable in that direction, and you want to start locking it down. I don't know that line 2 is called anything, Jerry, other than line 2. It's not an actual. It's a thin line. So here's band number 1, counting from the bottom. Band number 2, and line 2 is a red thin line at the top of the second band. That's why it's called line 2. Okay. Yeah. So this is band 1, band 2, line 2. And the snaky line, if you're just learning the system here, is called stealth. So you're gonna find in moves both up and down. Here, let's look at some long examples to the left. Let's say hypothetically, you were trading this and you got long from, I don't know, somewhere down in here. Now, in the case of the long trade, you're using a combination of line 6 and the green stealth. So it's quite possible that in this particular move up, you may or may not have been wicked out in this retracement right here, depending on how tight to line 6 and the stealth line you had your stops. But without question, it probably nicked you in here as it pierced line, let's see, this would be line 6, line 7. So here's the way this works. The outermost band is called 8. The line below it, which is not shown, it would be line 7 at the top of band 7, and the line here at the top of line 6 would be line 6. This is band number 6. 5, 6, 7, 8. Line 6 is at the top of the 6th band. So, you could have you might not got here, but it definitely wicked you out right here. Right over here. This one would have definitely got you. Because it pierced line 5. So, I mean, that's kind of the line in the sand there. Now, pop quiz for those of you who have come to other webinars. Is this retracement here, in this area right here, a legitimate long entry or long re-entry? Just a yes or no. That's all you got to type in a Y for yes, N for no. Does it meet our criteria for depth of retracement for long re-entry in this box right here, long on the Russell, yes or no? Now, granted, that's 2:32 in the morning in the middle of the European trade session, so unless you're a night owl, you probably weren't even up. But nonetheless, was it a trade or not? I'll give you 3 more seconds to type an answer in. Yes, it's legit, and no, it's not. This is quizzing you on so you can remember what the criteria is to enter a long trade in terms of the depth of pullback. That's what this question is. 2 more seconds. Simple yes or no. Time's up. Yes. Yes, it is. If you recall, our criteria are for entering a long trade in the minimum depth of retracement. No, Ven. No, let me explain. Hold on. He's saying, well, it didn't touch the midband. Well, that's what I'm going to try to explain to you. Okay. Some of you are brand new, and that's perfectly okay. So think of it this way. Think of it this way. The retracement sweet spot for entry looks something like this. Okay. I usually have to cover this every webinar, and that's perfectly okay because this is a critical decision point for trade entry, and you've got to know this. Minimum depth is here. It's got to close below line 6 and close below the stealth line, which it did. Checkbox, yes. Now, we all prefer a midband trade. We love the trades that go all the way down and sit right here on the midband. Anywhere in here is sort of the middle of the strike zone, if you will. And we all know, of course, sometimes it goes a little deeper, and these are called deep probe retracements where it goes below the midband, but still a legitimate long trade. So when I look at trades and I think of pullbacks, just sort of visualizing them in my trading mind's eye, if you will, I always look at it, I think of this strike zone. I don't physically draw it on the chart, but I visualize it. And I'm always thinking, okay, if it comes back into here, it's deep enough and I can take it. If it sits on the midband, we love that. And if it goes deeper, okay. How about this one over here on the long side? We'll do another pop quiz related to this. Is this area right here within the strike zone of taking long or short, long trades, no shorts? Yes or no? These retracements right back in here. Is this acceptable? Is this still long? Is this still taking long area? Simple yes or no. Two seconds. You should know by now. You got to know these, right? You can't sit and think about them. You should just instantly look at the box and say, is it legit or not? 1 second. Time's up. Yes. What did we just draw 2 seconds ago? Didn't I just draw this box right here? And I said this is the total legitimate area. Take us to the minimum is here, midband is here, and the deep one's there. And I went and I drew this box right here. This is a recreation of what I drew like less than 2 minutes ago. Well, yeah, it helps, Greg. Greg is pointing out the fact that it's still a green background. Yes. So here's another word, and I'm not disparaging the bar color, but sometimes people get confused when bars turn red below the midband. They start thinking that that is a potential trend change. Well, I'm here to tell you that unless it breaks down and comes way down and starts taking support levels out, which it did over here. So does everybody see the difference? Let me just round this out, and then we got to move on. Okay. Can everybody see the difference between a move like this in terms of retracement and a move like this in terms of retracement and a move like this in terms of retracement? Does everybody see the difference between these three areas? Retracement, trend is up, retracement, trend is up, retracement, trend is up. That's why I said before the open itself, you actually had a red bar probe underneath the midband, and this was still a legitimate long trade here, right? Whereas in this case here, it breaks down, setting up the short because you had this critical fail on the two attempts to get back to the top that it never did. When you see this kind of price action, this is telling you, this is very telling. It's saying trend change possibly afoot. I don't have the strength to even get back to the top. All right? Let's move on to another instrument. I'm almost halfway through the presentation here, and I don't want to spend all night on Russell. Excuse me. Any other questions on the Russell chart? Because I want to move on. I got 4 other instruments to cover. Yeah, that's right. That's right, John. Okay, let me flip to crude. There's quite a few questions on crude from this morning, so I want to make sure we get in there and don't run out of time and address crude. I'm going to look at 2 important areas on crude oil. The first one is going to be the pit open at 6. Tends to be a lot of movement on crude around the pit when the pit opens, 6 a.m. Pacific time, and then we had the inventory that was at 8 a.m. Pacific today. Two separate issues. And here's how I'd like to address it. I'm going to put a line on here vertically that is going to show 6 o'clock Pacific, and the room opened at 5:55. So I'm going to show the market going into 5:55 and reconstruct the open of crude today. And when you think you see a trade, you type in a T. You don't even have to say what direction you think it's going to go or what type of trade you're going to take, long or short. It doesn't matter. You just tell me when you think you see a trade on crude, you bingo, type in the letter T. Are you ready? I know it's paused. I'm setting this chart up, Peter. I'm going to start it right now. Here we go. Everybody ready? You're going to call the trade when you think it sets up. And I'm going to start right now. Advancing the chart. Okay, now we're at 5:51, 4 minutes before Gary opens the no, you should see crude. Everybody see crude? CL? Crude oil? CL? 5:51 right here. 5:52. Gary's getting ready to open the room in like a couple of minutes. CL right here. Cursor moving. Okay, I'm advancing the chart, and when you see the trade set up, you type in a T. Ready? Here we go. Okay, there's 5:55. Room just open. Blow the chart up a little bit. Typing in a T when you think the trade is ready to take. You everybody see my cursor moving around? See the chart? I'm moving the chart back and forth. See it? Yes? Anybody not seeing the chart move with my cursor? Okay, looks good. All right, here we are, 5:55, room opening. You're coming in, and we're starting to look for trades. 5:56, 5:57. Market opens in 3 minutes. Room's open. You're in there looking at charts. There's the pit open at 6 a.m. right there. So that's how it looked, right at 6. Right here. Here's 6. There's the market at 6 o'clock. Pit is open. Okay, you're at 6:01. 6:02, 6:05, 6:09. All right, I'm gonna stop it right there. Okay. All right. Let me address it this way. Most of you typed in a T when crude was sitting right here, and that is correct. This is where the trade set up. Now, that being said, a few of you were early birds, and you typed in a T, I think, when the market did this. While this meets the criteria of trading, in other words, it closed above line 2 and stealth, I don't know that I'd be taking a shallow retracement with 1 or 2 minutes until the pit opens. I think this is a case where you really want to wait for the pit to open and see what the market's going to do. If you took that trade and you were filled short on the close of this bar, you got stopped out. Okay, and if you did take it and you saw this happen with these candles right here, and then this bar closed back up, what do we talk about doing when you get that? So you're filled short here. Let's reconstruct this. If you were an early bird, if you were an early bird and you shorted before the pit open, which I don't recommend, but if you did, 74.14 was your fill. Now this would have looked something like this. Here's your fill. If you had the default object trader 12 tick stop, your initial stop is sitting up here at 74.26, which is all the way up here. Yeah, way the heck up there. Now, your trade would look like this. You'd be up a little bit, you'd be down a little bit. You'd be up $10, down 10, 20, 30, 40, 50 bucks, break even. Now you're up 10, 20 bucks, 10, 20 bucks. You see that these candles are not getting back down to here or even breaking it. The bars are closing back up against you into the box. What do you do? Hit the close button. Drag your stop down. It's the same condition that happened on the Russell. Ba-bamba, close, I'm out. Yeah, you get out. You don't let this thing run all the way against you and take a full stop out, because then after the full stop out, you're looking at trying to get back in where you just got out. Yeah, you want to just get out of there. You want to just get out of there. You can either drag your stop down super tight and let that bar take you out, or my preference when it's not working out is just hit the close, take the hit, a couple, 3 ticks, whatever, 4 ticks. Just take it. This next trade more than made up for it. Notice how it comes up here, wicks the mid-band, sitting here, 6:00, 6 o'clock, 6:01, 6:02. Didn't really roll and break till 6:04. It sat here for 4 minutes. That is plenty of time to get short and put a box in here, or put a limit sell order, or hit a market order with a tight stop. By hook or by crook, you're short. Robert, you got burned on that? Yeah, some people might have. I don't know. I don't think Gary called it. I wasn't there. I don't know what happened as far as this shallow retracement. I'm sure he called this trade right here. I'd bet money on that. And then you got was there another shot to get short here? Yeah, right here. Right around 6:10, between 6:10 and 6:14, you had another pullback here that actually allowed you to get in again. This trade here got a scalp off. In fact, it might have stopped you out and you had to re-enter. I didn't take this trade, so I don't know. Oh, he's running a little bit late today. He didn't make that. He missed that call. Okay. Well, I mean, you could have taken it. It fit the criteria of the entry. That is a mid-band roll short in a downtrend. Everybody sees that. So that is a legit short entry. And then you had a deeper retrace here that was an entry too. Let's see what else happened on oil, and we'll track it on into the pit. Or I'm sorry, the inventory number, which came at 8 o'clock. Okay, let's do another exercise on crude. This is testing your entry skills to make sure that you see the entries correctly. I'll help you out. There is another short entry coming, and I'm going to slowly advance the chart, and you're going to tell me where it is by entering S for short. When you think it's time to re-enter short on crude. Here we go. Pretend we haven't, just suspend disbelief for a minute. We have not taken these 2 trades, and you didn't take this one and get stopped out. You are flat, and you are looking for shorts. Here we go. I'm advancing the chart. There's 6:13, 6:15. Type in an S when you think it's time to enter short. 6:16, 6:17, sitting down here. 6:19. Let me blow this up a little bit here. Remember, you're looking for shorts. What's the criteria to get short? 6:18, 6:19, 6:22, 6:30, 6:31. All right, I'm going to stop it right there. Good. Most of you caught this. Many of you here tonight. We got a great turnout tonight, so appreciate everybody coming in. And this is recorded, by the way, so if you have to leave early, so I see quite a few came in late. Don't worry about it. We'll post it tomorrow. You get the whole thing. Okay, don't worry about it. Right here. See those 2 bars come up, wick just shy of the midband? This was short re-entry 1. Well, you had a falsie here before. I'm not counting this one. That was before the pit open. I'm saying 1 here, 2 here, 3 here. And then some of you actually typed in another short entry when these bars formed right here, and that is correct. Arguably, you had 4 short entries on crude right here. All scalps worked out. Every single one of them. No heat. None of them went against you. See, we're saying it comes above line 2 and above stealth, and it comes just in between there and the midband. Those are legitimate, deep enough retracements to go ahead and take the shorts. Now, word of caution. There were a couple of you that typed in shorts here and here. Now that, I have to tell you, word of caution, that is not correct. You're going to have to work on your entry skills a little bit there. You got to be looking for retracements. So just to be clear, because like I said, there's still a lot of new people just learning this, and that's perfectly acceptable. In a downtrend, the way it works is this: the market has a thrust. In a downtrend, the thrust part of the movement is down. The retracement part is back up. That's called the retracement. We are retracement traders. So in a trend down, we need the market to pull back to roll over to get short. Here's another example of a thrust right here in the down direction. So just to be clear, you have to practice watching these price patterns so that you do not get in at the bottom of a thrust. And I understand the psychology behind it. You want to see the market go down, 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 and it goes down. Just reconstructing this for a minute. You see it go down, it goes down, 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 and then now you're down here and you're convinced it's tanking. You're convinced it is tanking. You hit a market short. You say, now it's tank. I'm going to catch. This is going to drop 110. I'm going to make a fortune on oil today. Woo! Finally convinced. I got to get in. Only to find out that it retraces right against you, and ba-bomba takes your stop out up here. Every time I get in this market, they know I'm in. They're running against me, and I take a full stop out. What the heck? And it comes back up, and then it rolls over. And then it goes right back in my favor. And then you do it again. You pull the trigger down here. Rinse, repeat. Only you get stopped out again when everybody else is getting short. So the term rollover or bounce means this. In the case of the rollover in the short, what this means is that a series of bars will be retracing until they reach the apex of the retracement. Let's look at these examples. Here the market came down and found support down here, 74.06 from this thrust short right here. Now, see how these bars are closing up against the trend? Can you see that? Each one of these bars is closing up against the trend. That is the definition of a retracement. The trend is down, however, the bars are going up. Okay? At some point, they are going to reach an equilibrium where they are no longer going up and they are going to pause or stall out like this bar right here. And then what will happen is, in the case of the downtrend, you will have what is called a resumption of selling, where the bars will then start going down again and the sell programs kick in and the market is selling. So when it hits here and rolls over, this is the shorting opportunity here. Let's look at another example. Here's another thrust down from here. Goes all the way down to 73.92, a fresh swing low. Okay? Notice how these bars start closing up methodically, methodically, methodically. We can see here, even though we've retraced off the 73.92, is this a legitimate short trade right here, yes or no? These bars right here in that little box. Is that the place to get short? Pull back off the lows. Here's the lows right here, 73.92. Look, you're already up 74. That's like 8, 9, 10 ticks. Man, maybe it's going to rip and tank. Let's just get in here. What do you think? Legit? No, it does not meet our criteria. Think of it this way. Our criteria for taking the short on a minimum retracement has to close above here, line 2 and stealth. It has to get in this area between here, at a minimum, between here and the midband, at a bare minimum. And you can see clearly here that these bars meet that criteria quite nicely. Bars closing up, closing up, closing up, closing up, closing up. Equilibrium is reached. The apex is hit. The bars roll over. Resumption of selling. Bars close down. Go back and check the low. This is thrust retracement. Thrust retracement. If you learn anything from this webinar, the concept of thrust retracement in a trend is just critical to your success. You have to know whether a market is thrusting in the trend direction or is retracing. In the case of the downtrend, the retracement will always be up and the thrust will always be down. And you can tell so by red background, predominantly red bars. The midband and all the bands are stair-stepping down like a set of stairs going to a basement. You're looking for pullbacks to resistance to take the market short in every case. The opposite true in an uptrend. Now let's quickly fast forward to to the inventory numbers. Since there was a holiday, by the way, before I do that, I have to follow through on this third short entry, which actually turned out to be a beautiful short trade right here. That could have been your one and done right there. Arguably 1, 2, 3, 4 short entries, all legit, all made money. But it wasn't until this fourth one where you broke support here, 6:30 equity market open right here, you rip through support and she just tanks. Now let's quickly fast forward over to, and by the way, I think Gary took a long trade here too, didn't he? I think I caught part of this. I don't remember if I got all of it. Everybody knows, of course, you want to be have your positions closed at least 1 to 5 minutes, 3 minutes ahead of the inventory, and I'm going to show you why. Okay, before I do that, let me just show that, because you know what? I only got 10 minutes left, and I got 3 more instances to show. Let me show you why you don't want to be in the middle of the inventory number. Here is 759 on crude right here. This is when the inventory numbers come out. Actually, let's go back. Here's 7:58, 2 minutes before. What was happening a minute or two before the inventory numbers actually hit? What was happening here? What was going on? The numbers didn't actually come out until here. In fact, this is all 7:59 right here. Yeah, let me scrunch it up so you can appreciate how many bars are shooting out. Can you say leak? Can you say newsbots? Can you say leaky newsbots? Twice? 3 times real fast? What's going on here? Oh, darn it. Stand by. Uh-oh. Get some problems here. Uh-oh. Getting a blowout. Stand by. Chart going crazy on me. Get back here, you crazy thing. Oh, she's completely blown out. Hold on a second. Oil's getting away from me here. I gotta show this. This is really unbelievable. All right, I'm trying to get it. I think I got it. Okay, I got it back. Here we go. I know people run these news bots, and they make a lot of money. Okay, they do. They get a tip. They get in there. They get a little tip on the news. Today, why did the market sell off? Anybody? Why did crude sell off so vociferously at the inventory number? What were the news bots doing? What did they read that made them sell off? Anybody remember? News bots are automated script programs that go in, and they're specifically designed to read news as it is released and react accordingly. In this case, there was a massive sell-off. If you recall, over here, Gary was long going into the inventory number, and he called an out that was within 3 ticks of the swing high at 74.27. He got out right here, long, closed it, and thank God he did, because this thing dropped 200 ticks. Here's what the news was, and this is what the bots read. And they get in there and they get that news microseconds before it's released to the public, so they're already reacting. They were calling for a drawdown of 4.4 million barrels. You can see that last week, extremely bearish, 10 million barrel drawdown. Bullish. Bullish. These are bullish numbers. When the oil inventory draws down dramatically, it is a bullish sign, and the news bots run it up. Now, that's not to say it's going to run up all day long. They make their money within minutes, within microseconds, within a minute, 2 minutes. They're done. If I was to put volume bars on here, you would see huge spikes in volume as this news bots were selling off. Quite contrary, you got a build of 1.2 million barrels. In the other direction, Yeah, it was a great exit, wasn't it, Bren? He got out right at the peak, right before that inventory hit. It's a good thing he did. Look at this thing sell off. This is his 759 here, 756, 750. This is 1 minute of bars right here. There's probably 200 bars in there, right? Here's 8 o'clock. This is when the news is supposed to come out. But look, the bots are reading it back here. Can you say leaky leak on your wiki leak? And then Gagunga all the way down to 72.90. What was the drop from the apex of where Gary got out and when the news bots were done? 74.27. Here's 73.27. And here is 72.90. 140 ticks. Yeah, that's extremely bearish. When you get a complete build in the opposite direction of what they expected, which was a $4.4 million barrel drawdown, which would have been bullish, the news bots would have run it up. Like last week, it was, I don't know if you recall, the number was 9.9, and I think they expected like 2 or something, and so they ran the market like a big dog. Don't you remember? It went up to like 4-year highs. Remember? News bots. So what I'm trying to impress upon you is that this is not tradable. Okay, you just can't get in the middle of these news bots. You can't. The market has to settle down before you can take anything. And it was pretty darn choppy afterwards. Notice how they tried to take this bottom out. Humans are starting to get back involved. And they try to run it back up. Looks like about 50%. And then they flip it and then run it down and then they run it back up. So it was pretty choppy after that. It's hard to trade that into the pit close. Yeah, Chris, just type in news bots in Google. Trading news bots. And it'll give you links. It'll explain how they work. There's scripts that go in and read the news. Auto scripts. They interpret the news in nanoseconds. Sometimes they're leaked the news several microseconds ahead of time. That's all they need is that slight advantage. And then they start, like in the case of this build, they start pouring in sell orders. Sellers. Tick, 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 tick. Sell. Short. Load it. More short. And then when it bottoms, when you start to see this is right here was not buying. This is not buying. No, this is short covering. This is the shorties covering to make their money. They're buying it back. And then you get one last thrust. And this might have been a little bit of buying over here. This flushed out all the shorties. Short cover, and then they start to run it up, and then one last gasp over here. But the news bots are done by here. This is it. News bots are done. You can tell right here. Somewhere either between here and here, the first few couple of 3, 4, 5 minutes after news. That's it. They're done. Probably by here, 8:03. You can't short that, Ven. You can't get in the middle of that. It's too fast. You don't know where your fill's going to be. Your fill could be way down here somewhere, and you're looking to get out, and there's nobody taking the other side. So you just have to sit on your hands and wait when this crude oil inventory comes in. It's not tradable. Just so everybody's clear on that, it's not tradable. You have to wait until it gets over here, a couple of 5-10 minutes into when it starts sorting out what direction it wants to go. You might have caught a little bit of a long trade here. Here's a pullback for a long, little scalpy long, flip, goes short again. I don't know. I don't personally trade crude on inventory days, so, I mean, you got to pick your spots. Okay, what was the other thing we want to see? I got time for one more. I think on the list we had gold, and what was the other one? We already got YM, we got Russell, we got crude. What was that other instrument? Gold? All right, we got a choice, gold or ES. We've already covered 2 equities. Who wants to show a hand? Who wants to see gold? Gold traders? Tell you what, if we do it very, very super quickly, I'll try to squeak both in. Let's try to squeak a quick gold in and squeak it, and then we'll try to get a quick ES in there. ES was pretty range bound today, so it did. Here's gold. I gotta tell you, occasionally I'll take a gold trade, but a lot of times I don't trade gold because it's just too slow for my liking. I mean, if you like slow markets, just kind of sit there for a while. I mean, this is the entire day on gold. Here's midnight, and here's the close. Here's midnight. Here's 6:30 Pacific. This is when we start looking at it over here. You did eventually get a spike up into 8 o'clock. I think Gary took this long. I might have cut part of this. I can't remember. Here's today in gold. 6:30 was right here. Somewhere right in here. So yeah, we did have a pullback. There was a couple of spots. Oh, I remember now. Yeah, okay. So there was sort of a little bit of a deep probe pullback. I think we called a long in the room here. I remember it spiked up. So you had a nice scalp trade or resistance. Now this is what I remember. It sat here for like 10 minutes. 10 minutes is a long time in trading for a market to just sit there. And it just sat on the mid-band. Look at this. Remember this? Remember that? Remember just sitting here? Here, let's look how long it sat there. Here, it came down here around 6:53-ish. 6:59 is here. 7 o'clock is here. It didn't really break up until 7:14. It was 15 minutes. 15 minutes it sat here. So anyway, there was plenty of time to draw a box and or put a buy limit order in with your initial stop just under here. So there wasn't a lot of risk in that trade. Now, if you did box it, you were filled on the close of this bar right here. You pop up a scalp, pulls back. Pop quiz, you still awake? Is this a legit long entry on gold, yes or no? Yes or no? This box. I'm only giving you 4 seconds. Wire in. Hello. This thing on. Anybody awake? Gold box long. Yes or no? 3 seconds. Right here. If this happens tomorrow on gold, will you take it? Yes or no? Yes or no? What is the criteria to get in? 2 seconds left. Time's up. From a technical point of view, not really. Because the criteria has got to close below stealth and line 2, as it did right here. Here would be an example of an acceptable retracement that didn't really pan out. You checkbox 1, you close below stealth. Yes. You wicked line 2, borderline. John says, yes, that looks legit, but he didn't take it. Now, hindsight's 2020. It did work out, and you would have made good money on the trade. Absolutely. That was actually a pretty good trade. But they all don't work out like that. So if you take one like that on a very shallow retracement, a buy limit order or a closed bar, you got to put your stop real tight under this swing right here, okay? This is not put 10, 12 tick, 15 tick stop and go all the way. Don't put your stop way down here and get into a hope trade where it starts going against you and you're like, oh, it bounces. Just get out. Just get out of it. Right? All right, ES, and let's close this puppy down. Stand by. I'm going to load ES chart right up for you. Let's get to it. Let's get to it right now. Let's not mess around anymore. It's time to get this done. Chart's loading. Chart's loading. Come on, Charteroo. Good for you. Okay, now I'm going to show you. This is here's how I'd like to address ES. Okay, okay, check this out. All right. There we go. Now, look, there's pluses and minuses of trading ES. On the plus side, it's very extremely institutionally traded. There's enormous volume, 1 million to 1.5 million contracts a day go through on ES. Liquidity, total liquidity. You want to trade 100 contracts, ES will gobble it up. Nom, 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 give me some more. All right. Liquidity is just unbelievable. On the other hand, it doesn't move very far or very fast. So you got to be patient. It's not like trading NASDAQ or YM where the market's flying all over the place all day long. It doesn't work like that. ES just does not work like that. Now notice what happened here on the 4. I'm going to show this in 2 forms. I'm going to show you on a 4 and a 2. 6:30 Pacific was right about here. Now you can see that overnight in the Asian session or the European session. All right. Stand by 1 second, please. Testing audio. 1, 2, 3. Can anybody hear my voice over there? I think I lost the mic. It was on and off here for a minute or two. Let's quickly go through this because I got to wrap this up. We're running out of time. I prefer to trade the 2. I'm going to use the 4 to show more of the macro picture of what's going on here, and then we'll address the trades on the 2. Between midnight and 6:30 Pacific in the European session, you can see that ES made a very nice move here. This was an uptrend. Now, just like the Russell and YM, you can see that we came down. We held the midband right at the open, and it tried to bounce, but it didn't. It couldn't get back to the top. It couldn't even clear line 2 or 6. 6. This is 6. The thin green line 6. We come down here. Now, you would not necessarily have taken a short here because at the time this happened at 6:32, it was not clear that this was a potential trend change. However, can you see how off of this support level that you kept getting rejected off the midband? Every time it retraced, it couldn't even get over the midband. Right here was a kiss and roll. Right here was a kiss and roll. And this was your spot to get short, right in here. Now, you had to be patient. This is 7 o'clock. So it sat, here's 6:30, here's 7 o'clock, here's 7:10. This whole area is 40 minutes of trading. All right, I'm going to show you till 8 o'clock. You had the short. You had some retracements, and you stopped out here. So this was actually a very good trade short that took you all the way over to 8 o'clock, and you got out right here. And then it flipped and ran up, and you had a beautiful long trade here if you took it on the flip at 8:30. Now, let me change this up, and I'm going to show you a 2. It's going to look very similar, but you're going to get much more granularity in terms of potential short or long entries because you're going to get many more bars that occur at these levels. 2 is loading. Stand by. I prefer the 2 because ES is so slow that it gives you more bars. You can see the level of depth and granularity of what's happening, whereas the 4 is it takes up a lot of space on the 4. Okay, it just does. It's harder to see the trades, in my opinion. I mean, you could trade a 4 if you want. It's up to you. Here's the same chart with a 2. Right here. So you see, you get a little more detail here. You can see that it's a little easier to see how you kiss and roll, and you would be looking to short the rollovers and cover its support. Short the rollover, take a scalp trade, and now you got the runners. Arguably, this was another reentry over here where you wouldn't have seen on a 4 right here. Caught the tail last half of the move. Just barely meeting the criteria for entry. Right here. You wouldn't have seen this on a 4. Let me get this out of the way. See it? See the short reentry here on the 2? Can you see it? Right here? Yeah, the 4, you would have missed that. Just trust me. You would have missed that. You caught a big chunk move down here. Come back up. Kiss the mid-band. Take it out. Here's the long trade. Here's some pullbacks. And you had one entry here, possibly. The problem is that the stealth in line 6 keeping up with it is a little. Sometimes the stealth gets a little displaced on the 2. That's the only problem with that. There's the long trade. There's another long trade right here. This would have been later in the morning. Here you're looking at 8:30, 9, 10 o'clock. 8 o'clock was here. We closed the room here. In fact, I think I called an out down here at like, anybody remember 17? Remember I said if it breaks up through, I think it was 17. Or maybe it was 19. Remember in the room? Breaks up here, get out of it. I know before the room closed, I flattened it right here. I was out. But I rode that thing all the way down. If you shorted this rollover at 29.50 and you got out down here at 19, that's 10 times 4 is 40 times 12 and a quarter is $500. This short here is $500 a contract. That one trade right there. If you got the retracement, you cut about half of it. This one right here was about half of it. Yeah, it came back up, retraced about 50%. So, I mean, if ES is your style and you can handle this kind of price action, you don't mind the fact that it's slow, I would watch a 2, a 3, or a 4 on ES. It's going to amplify the movement a little bit. If you don't trade it in sim, if you're not used to it, don't get in there and start loading up the boat and you never traded it. And it might whack you, could whack you around a little bit if you not know what you're doing. But it is very slow and methodical. If you like the slower pace, then this one would be for you because it's got a ton of volume on it. All right, that is a wrap. Thank you for coming, everybody. Appreciate your time. Enjoy the rest of your Thursday. We do have a live room in the morning. Same time, same back channel. Gary opens up. Pit open. I'll be in there around 6:20 before the equity market open at 6:30, like I normally am. Call some trades, make some money on a nice Friday. And I think Gary has to take off. He's got the trip planned for this weekend. And then I have a webinar on Saturday morning, but we'll send out links, reminders for that tomorrow. Any final questions? Appreciate you sticking around, everybody. Sorry for the late start. We are good to go. Go have some dinner, watch a show. Enjoy the rest of your evening. We'll see you in the morning. Adios. Good night. Bye now.